Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC TV18 headquarters in Mumbai.
Good morning. Welcome to Bazaar Morning Call. I'm Lata, and with me, the full house, Anuj and Sonia. We're actually a full house in another sense in terms of the FIIs buying. I mean, the graph will come up for you. I think that's an important note after yesterday's 569 crores of FII buying. Look at the way the buying has happened. Okay, this is only for, August 6th, this week, 6th, 7th and 8th. This makes it 1140 crore for the current month, for the current week. If you take the month, okay, there's a little bit of negativity, but even then, August is plus 392 crore. And then you have, look at the other numbers, receding. And these are provisional NSE numbers. If you take July from the depositories, then it's actually already plus 2200 for July itself. So you have a plus 2200 for July, and in 1 month in August, you have 1,134 crores. So clearly the tide is turning, and in a minute we are going to read out what Shakti Siva has written about the region itself seeing more FII flows, and India in particular. So there's that big positive. For us as well, another positive as we go into trade today is the fact that crude is at $72. Now, whereas for the better part of the first 4 months, we were wondering whether it'll breach 80. Now it looks like it's not even holding 74 or 75. So that is yet another positive. You may argue that this is because of fears of lower trade, and when there are fears of a softer global economy, India also is impacted. But we are impacted less. We tend to be outperformers when crude falls. So that's yet another positive for us, and even domestically, a very big positive. But in the light of all this, I want, and particularly Anuj's comments on it, are we overbought? I can't remember last when the put-call ratio was almost 1.8, 1.76. So is all the good news in the price for the moment? Should we have to take some breath, digest all the buying that has been done, and only then climb? That's a question for technical experts like Anuj to answer.
Yeah, okay, so you can go ahead and ask him that question.
No, you tell
Anuj,
me, Sonia,
morning,
any other observations you wanted to add?
No, in fact, we were discussing this yesterday as well, Lata, as to how now, earlier through the course of the year, there was IT and consumption that were leading from the front. Now, banks have started to participate. I mean, even if you look at the performance this week itself, or even yesterday, stocks like ICICI Bank, Axis Bank have come back into the fore. Anuj, morning, you were making this point earlier as to how it's now started to become a bit more broad-based.
Yeah.
We are seeing Reliance participate more, banks are participating. You see new leaders emerge, which could perhaps continue to take this market higher?
Morning, Sonia. Morning, Lada. Two or three points here. You make most money when the market is overbought or when the market is oversold, because at the end of the day, that's where the momentum is. That's the expansion phase of the market.
That's where the trader makes money.
That's where the trader makes the money. And FI buying and selling is like that. FI buying and selling happens at, there are two kinds of orders in the market. One is market order, one is limit order. In limit orders, you want to buy at your price, which is what DIs do. A market order is where, you want to buy or sell wherever the market is. And that's what normally the FIIs do, because, they take a larger... So that way, I think in the near term, there's still some, momentum for the bulls. But this is a buy on dips market. This is, yesterday also, the market gave you 2 dips. If you bought them, you made money. If you chase momentum, the market is punishing you as well. So basic premise for you should be to buy the dip till that trade fails. As simple as that. There will be one dip which you'll buy, which will not work out, so be it. Till the time the market's verdict is that if you buy the dips, you're making money, you should respect that, and the market will respect you. There's weekly options expiry today on Bank Nifty. I think the trade would be to wait and see if there's any dip. And with yesterday's low of 27,858 as your sacrosanct stop, perhaps you could try a long trade. The Nifty has finally taken out the 10,430 resistance, and my sense is that it will now become support instead of resistance. So if the market opens, SGX Nifty is indicating slight downtake. I don't know if that will play out, but if the market gives you for any reason a dip towards 10,430, perhaps that would be a buying opportunity. Sorry, 11,430. Why I'm still saying 10,430? I'm sorry, 11,430. In that case, a move towards 11,500 is possible. And 11,379, yesterday's lowest sacrosanct. The only problem now is that for last 2 days, market has once again started to become a bit narrow in the sense that mid-caps have started to underperform. This week, the Nifty Bank is up 1.3%, Nifty is up 0.8%, mid-cap is up only 0.16%. Now, this could just be a 2 or 3 day factor which is playing out, but just keep an eye on the advanced decline. Yesterday, it was in favor of declines. On Tuesday, it was in favor of declines. And it's starting at 3:1, 2:1, and ending in favor of declines, which is not really the healthiest of the market. But anyway, on the index, I think there's still room to go. There's unfinished business, I think, around 11,500 or thereabout.
Also, I guess this market is rewarding a lot of good earnings, and we did have a strong set of numbers coming from a lot of companies post-markets yesterday, whether it was Nalco, Indian Bank, that strong loan growth seen there. Some of the oil marketing companies didn't do as badly as what the street was expecting. In fact, HPCL's numbers were good. So all in all, this market is rewarding good numbers too.
Oh, yes, there are good numbers, but I would still wonder if the numbers are good enough for the markets to be at 11,500. Markets don't listen. I mean, they go on when they are in a bull momentum. But the earnings season is not so stupendous that, you can justify valuations. Not that bulls often wait for justification. That's just a point on the table. I mean, there are a fair number of the Lupins and the Thermaxes where the results are pretty pathetic. So, clearly the investment cycle has not started. Otherwise, you won't get results like this from perhaps a Thermax. So there are those negatives. But at the moment, advantage bulls. No two ways about it.
Okay, in fact, that's what Sakti Siva mentions as well. So let's take a look at what she has to say as we head into trade this morning. She says, while these trends could easily reverse, there has been net foreign buying in emerging Asia, ex-China, ex-Malaysia, of $2 billion over the past 15 days. She says, while in their report of July 30, they had highlighted that the bulk of net foreign buying was in Taiwan. Now it suggests the buying is becoming more broad-based. She says over the past 15 days, net foreign buying has been $721 million in Taiwan, followed by $468 million in India, $354 million in Thailand, $236 million in Korea, and $220 million in Indonesia.
Oh, yes, we waxed eloquent on that, didn't we? So FIIs looks like are back. Just a point that Nigel was making, the advantage for India over China also is that our currency is not depreciated so much. The Chinese yuan has. So even immediately, the advantage is to put it in a country where the currency is still to your advantage. Let's get money market views. Since we spoke about the currency, Mohan Shenoy of Kotak Mahindra Bank says the escalation in trade war and strong data emanating from the US is leading to overall dollar strength. He says the rupee is flat, with overall dollar strength being countered by lower oil prices and robust equity markets. He expects the USD-INR pair to trade in a range of 68.35, 68.65 for the day.
And Mohan Shenoy says also about the bond markets, overnight fall in crude prices are likely to improve the sentiment in the bond market. He says the higher dividend announcement by the RBI is also bond positive, and he expects the 10-year benchmark bond yield to trade in a range of 7.73 to 7.78% for the day.
That's very important. Yesterday, 50,000 crores dividend declared by the Reserve Bank compared to 30,000 crores last year. Part of this 50,000 crores is actually an interim dividend. They already paid 10,000 crore. But what whets the market's appetite is what prevents the Reserve Bank from being asked another interim dividend later on this year. So that's a major bond positive. And what's bond positive, as we know, is also NBFC positive.
Oh, yes, it is. But let's talk about global markets. Stable cues from there. Here's Nigel with the world view.
Well, that's right. As stable as can be, the Dow ending mildly in the red, but the Nasdaq did a relative outperformance. Remember, yesterday those markets, they were really reacting to the tariffs that were imposed on certain U.S. goods by the Ministry of in China, in fact. So 25% is a tariff that's been imposed on around 16 billion worth of goods. That includes vehicles, motorbikes, and the likes. Well, in terms of the Dow, the biggest losers were Disney. Disney's second day running, we are seeing some profit booking there. But when you have these trade war fears that come up, you see Caterpillar and Boeing, they're the first to react, and both of them ended with a cut of close to around 1%. The Nasdaq, though, that's in a world of its own. It's on a winning streak, 7th straight session that it's been on the winning streak, and a couple of stocks did well over there. We had Amazon as well as Facebook. Both of them did end well in the green. In terms of the European markets, it ended mixed, but the FTSE was a relative outperformer in trade overnight, while the Asian markets today as well, they're trading more or less mixed. But I think one important cue would really be crude prices. That's dipped nearly around 3% overnight. A couple of factors played out there. The weak import duty, crude import into China. And the second factor is lower than expected drawdown in US stockpiles. And that's why we did see crude prices down 3% overnight. The SGX Nifty, though, should give you the initial rate that we'll be looking at. It was indicating a more or less flattish start. Back to you.
Okay, Nigel, thanks a lot for that. Yes, crude prices have fallen overnight. That's a positive for us as well. But moving on, it's a mega CNBC TV18 exclusive. CNBC TV18 Shireen Bhan traveled to the Bill and Melinda Gates Foundation to catch up with the co-chairman of the foundation and Microsoft co-founder Bill Gates. According to Gates, the ongoing trade tariff between the US, China and other countries caught in between will lead to a sluggish global economic growth going forward. And that is just one of the many concerns he has if the tariff war escalates. So here's an excerpt of that conversation.
We're in the midst of tariffs and retaliatory tariffs, with the US imposing tariffs, China responding, the EU is in on it as well, including India. How do you see the global economy today as we look at political leaders who are perhaps looking more inwards than outwards? What is the impact likely to be on global trade?
Well, the global economy actually is doing quite well right now. The estimates have actually been pushed up a little bit. U.S. growth, China growth, India growth. Those are, it's rare that those are all going fairly well. Certainly these trade issues are scary in that if you get people turning inwards, raising up tariffs, the global economy is not going to do as well. There's huge benefits to trade. Take if one country's growing too much of a crop, the fact that you can, send it, say, to Africa where it's needed. Otherwise, when you get a bumper crop, then you get a price collapse because you don't have that global demand. And so agriculture's been an area where a number of countries, including India, had to think, okay, how willing are they to be a part of that global trading system.
So, we're not in the midst of a full-blown trade war just yet. What do you believe is likely to be the tipping point?
Well, I don't have a crystal ball on this, but the rhetoric that, okay, we'll use trade tariffs and we'll force somebody to do something, that can escalate. And so, we could end up with a lot of tariffs and all the plans people have made about assuming their global supply chains will work and that they're able to do exports and imports. That alone will be quite a burden on economic growth and therefore for job creation. And in all of these things, you always have to say, okay, the poorest countries, they're the ones who are just barely getting by. And so it's always interesting to think, how do we avoid them suffering? Even Indian farmers want, their crops to be exportable.
As promised, we're going to tell you what the stocks are as we head into trade this morning. The SGX Nifty is quiet, but we've seen these days play out, right? Quiet SGX Nifty, and then the market picks up through the course of the day. So, Anuj, what are you looking at this morning?
Sonia, the lowest beta stocks actually create most wealth. Bajaj Finance is a stock I'm again watching out for. Fresh all-time high. And, got to keep things simple in some markets. This is not a day call. The point I'm trying to make here is yesterday also new high, big delivery volumes. If there's any dip in these kind of stocks and you buy, that ultimately you will be making money. So that's just, a point I wanted to make. SBI could be interesting because, just to carry forward the point that Lata made on that higher dividend. I think the market didn't perhaps started to factor that in the last hour yesterday. The way the Bank Nifty from the lows once again recovered sharply. PSU banks did well. Also, it comes out with numbers tomorrow, and last quarter there was quite a bit of recovery. The market would believe that the recovery is going to continue. And one point that I want to make is, if you want to buy any PSU bank, it has to be State Bank of India, because with the rest, you saw what happens with PNB. So that way, I think SBI perhaps offers you still a decent risk reward. So I would want to see the market's reaction to SBI. it looks like it's bottomed out and is making a fresh move right now.
No, actually, whenever the macros go very positive for a country, it obviously shows in the banking system. And now with an RBI dividend, with crude lower, clearly for interest rates there isn't much of a fear. So bond prices will rise, and SBI has a giant bond book. The previous quarter they lost 3,400 crores because of bond prices falling. So clearly they stand to gain a goodish bit, and likewise a stable dollar usually benefits the banking system. But you know, you would have thought that the oil marketing companies would have had a bad quarter because of the way crude had risen last quarter. But Sonal is here to tell us that HP in particular didn't have all that bad a quarter, isn't it, Sonal?
But you know, Lata, that was majorly because of higher inventory gains that the company had reported. So basically, all the numbers were above our estimates. Profits slightly below the estimates, but that was because of one forex loss. So reported GRMs, that came in at $7.15 per barrel, and inventory gains, that came in at $3.43 per barrel. The core GRMs, that is the number that I'm looking out for, that came in at $3.72 per barrel versus an estimates of $5.7 per barrel. Even marketing margins, they came in lower than estimates. That came in at 3.6 rupees per litre versus an estimate of 3.8 rupees per litre. Profits also came below our estimates. That was majorly because of a forex loss. Jeffries maintains its underperformed rating with a target price of 250 rupees. BPCL also, the earnings were aided by higher inventory gains. The core GRMs, they came in at $4.15 per barrel versus an expectation of $5.2 per barrel. The core GRMs, they were weaker because of weaker GRMs at the Kochi refinery that is still going into its expansion phase. The inventory gain came in at 2,700 crores, mainly aided by higher inventory gains from the marketing segment. Deutsche Bank still has a buy rating on the stocks, target price of 510 rupees because they are betting on the marketing segment of this particular company. Back to you.
Take your point about lowered earnings, I'm sorry. But, you know, the way in which they are poised today with crude at 72 and already a selling they have seen earlier this week, today they may ignore the results.
Okay, well, let's see how that shapes up. But let's talk about some metal numbers. NMDC is on our radar. Nigel's with us. Nigel, most of the internals look weak. Revenues were down. Sales have fallen 26%. Operating profit as well. But was it at least better than the muted expectations that the street had?
Well, much better than the muted expectations, actually, Sonia. These numbers look very, very good in comparison to the expectations. Just to tell our viewers one thing, though, in the last 1 month from the lowest, the stock has moved from around 93 to around 113 rupees. So just keep that in mind. But otherwise, the numbers look good. Revenues are down by around 15%. Remember, we already had the sales volumes numbers with us, and that was down by 26%. So that told you that the realizations were higher by more than 10 to around 12%. The margins, though, that in fact did come in better. When you have a top-line degrowth, that really explained why. The realizations were higher, the selling costs were lower. That's because they didn't export anything. And thirdly, they sold more in Chhattisgarh rather than in Karnataka, where margins are better. So these numbers on the whole look good. The stock should open up well in the green.
Okay, Nigel, thanks a lot for that. Well, pharma companies came out with numbers yesterday. Cipla, of course, came right at the close of market hours. Lupin reacted negatively. Ekta, take us through all of them?
Yes, I'll just take you through. I'll start with Cipla. In fact, CLSA and Motilal have said that it was largely an operationally inline set of numbers. The company has guided for 15 product launches in the US and gross margins to improve with these new launches in the US. For Lupin, maybe there could be a little more of red on the stock. The company said they are looking to ramp up the US in the second half versus Q1. They are, however, on track for only a single-digit revenue growth and margin of 18 to 20-odd%. This is their earlier guidance, so they're sticking to it. And they hope the resolution of the warning letter before the end of the fiscal. So maybe a bit of sluggishness on that. For Strides, we could probably expect incremental buying. The company has increased its guidance for US market to a little over 20 to 23 filings versus 18 to 20 earlier. But Motilal has cut the FY 19-20 EPS, but they've said that it's an operational performance should pick up going forward, and they'll look out for that. Lastly, Natco in the red, its overall numbers have missed what was already very elevated expectations.
Okay, thanks a lot, Ekta, for that. Moving on, Blue Star is also on our radar today. Anisha will tell us how the numbers looked. Anisha?
Well, Sonia, we were expecting a decline when it comes to the AC business, and that is what we have seen. So the revenue for the AC segment has gone down by 4%. But do remember that the volumes can be even further lower than the 4% cut, given that there was a price hike when you see the year-on-year number. So that will be a bit of disappointment, though the margins in the AC business have been maintained. Other than that, the management commentary for the rest of the year is strong. They're optimistic that the festive season is going to be better. The revenue for this quarter was below below expectations, but the adjusted number looks in line. The overall margins have also improved year on year. That is because of the change in product mix. The profit looks a tad bit higher at 92 crores, given the fact that there was one-time gain of 15 crores. But overall, I think it is the AC business that the street takes notes of, and that is a bit of a dampener.
Okay. Let's get back to Nigel on NALCO numbers, Nigel.
Well, Lata, you remember last quarter we are at CNBC TV18 were on top of this. Alumina prices had surged up, and that's perfectly reflected in these numbers. These numbers look absolutely blockbuster. But remember, sustainability is going to be very, very important. For now, we'll talk about the numbers. Top line up by more than 60%. Operating profit jumped up more than 300%. Margins, the blended margins are around 34%, much, much better than what the street was working with. The alumina business, just take a look at that. In terms of a top line, that in fact did jump up, but the EBIT number looked very, very good. That came in at around 1,125. I was doing the back of the envelope calculation, and it means that the alumina realization was more than $515 per ton. So very good. If your alumina business is doing well, aluminum will not do well because you're buying alumina from another part of your business itself. So transfer pricing played out there, but EBIT of alumina business at around 55%. The stock will definitely open up well in the green, though it's rallied more than 10% in the last 1 month.
Okay, big surge in profitability, of course boosted by a higher other income, but numbers are looking very good. Thanks, Nigel, for that. What about Thermax, Anisha? How did it shape up this time?
Well, the numbers are a tad bit mixed because the revenue growth came in better than expectations, but the disappointment was on the margin front. The margins have dropped to around 200 basis point year on year, and that is because the raw material cost was higher, as well as the other expenses have gone up by 30% year on year. The profit was just up around by 4%, but the other disappointment came in on the order inflow front because that is down 14% year on year, and that has what the street a bit disappointed. So my expectation is stock will open up in the red.
Stock will open up in the red, but the stock that should open up in the green is Indian Bank, because yesterday it actually closed at the lowest point, and the numbers are quite okay, Abhishek.
Well, Anuj, it is the best number amongst PSU banks in terms of the loan growth. For last 5 quarters in a row, they have been beating all PSU banks in their loan growth. So loan growth at 23% has driven net interest margin to 3.1%. 7 quarters in a row, the net interest margin has been improving. The NI has beaten the estimate of Motilal Oswal. However, the PAT has come in just in line because of decline in other income. Asset quality remains stable. Gross NPA in absolute value declined by 1.5%. In ratio-wise, it declined by 17 basis points. Credit cost, that is provision for NPA divided by advances ratio, is at just 1.1%. Annualized slippage remained elevated, but the bank has guided for lower slippages ahead. Expect the stock to be in green today.
Okay. Well, actually, Indian Bank is a slightly different case after the big 1990s recast done by Damodaran, the former SEBI chief M. Damodaran, and getting a very powerful banker, Ranjana Kumar, onto Indian Bank. Indian Bank made a commitment to itself and to the government. It won't get into big infrastructure loans. Okay. So they escaped the worst that the PSU banks went through in the 2005 to 2010 period. So always a different case, and looks like after that minor bump they went through last quarter where they declared very high slippages, probably they're back on track. So Indian Bank once again on investor radar.
Okay, well, let's find out how Siemens numbers look this quarter. Anisha?
Well, the numbers reported were in line with expectations, a tad bit better, in fact, because the profit grew around 26% year on year, and there was a margin expansion as well. It was the energy management and digital factories business that did well for the company, and the lower income as well supported the bottom line growth. But other than that, the disappointment actually came in the order info front here as well, because the order intake was flat year on year at 2,800 odd crores, and that's the reason Deutsche Bank as well as Macquarie has cut the EPS targets for FY19. In terms of the management commentary, they say that the large orders are still getting delayed, but they are seeing a tad bit of pickup when it comes to the private capex.
Okay, that's important. Siemens, Thermax, all of them not in the best of health. Okay. Sonal, you have a bunch of other smaller company results?
Yes, I'll start with Phoenix Mills. Good set of numbers coming in from the company. The profits, they increased by around 40% at 64 crore rupees, and that was majorly driven by the retail rental income that increased by around 15% on a YOY basis. Sadbhav Infra, also decent set of numbers, and losses, they have contracted to 65 crores versus 120 crores on a YOY basis. Expect that stock to do well. City Networks, however, posted a weak set of numbers. The losses, they have expanded to 57 crores versus a loss of 15 crores last year. Expect that stock to be in red today. Back to you.
Okay, thanks a lot for that. Here's a quick recap then of our top stocks to watch. Stocks with positive news flow today: Bajaj Finance, SBI ahead of its numbers tomorrow, Cipla, Stride Shasan, NMDC, Nalco, Indian Bank, Siemens, Phoenix Mills, Sadbhav Infra, while stocks with negative news flow: HPCL, BPCL, Lupin Thermax and City Networks.
Well, we should have also the oil marketing companies for sure with the way crude is. But I just want to point out that we should very closely watch the power companies. I mean, many of them are penny stocks, but the banks. And that's because the Allahabad High Court hearing on the case of power companies versus RBI resumes today. And today could be a judgment day. It could be important because the hearing has gone on for a goodish bit. Now, what the power companies, that's basically the Indian Power Producers Association, IPPAI and APP, Association of Power Producers, want is that power companies should be ring-fenced and given a special dispensation from RBI. Remember, the RBI's February circular said all companies with over 2,000 crore stressed assets should either be resolved or they should go to the NCLT. Now, that date ends on August 27. That's hardly any time. So today, the power companies will look for a verdict. What goes in their favor is that there is the government that has set up this high-powered committee with the cabinet secretary as the chairman to look into the woes of power companies. So it is just possible. The parliamentary committee also has said that, we can't have so many power companies go to the NCLT or be scrapped. With so much of pressure coming from the political authorities, it is just possible the court could be swayed and could say, yes, give power companies a better dispensation. RBI won't listen. They will go on appeal to the Supreme Court or something on those lines could happen. But nevertheless, if a judgment comes saying that power companies deserve a better dispensation, then the banks will see a knee-jerk positive reaction. I mean, we'll have to just wait and see. Nothing may happen. The hearing may just get postponed and adjourned to another day. But important to keep that in mind.
Okay, important to keep that in mind. There were also some very interesting block deals that took place yesterday. Mangalam is here to tell us more about that. Mangalam.
That's right, Sonia. So two stocks on my radar on the back of bulk deals, and both these stocks are 10-12% off their 52-week highs. The first one is Ceylon Exploration, where influential investor Dolly Khanna, she's bought about 0.6% equity at a price of about 244 rupees a share. A little about the company, oil and gas exploration company, always in focus when oil prices move higher. All of last year, they did a net profit of 22 crores. In the first quarter of this year itself, they've done a profit of around 14 crores. For a market cap of 420 crore rupees, this company is on my radar. The other one is Suntech Realty, DSP BlackRock Mutual Fund. They've bought about 0.6% stake in the company as well at a price of close to around 415 rupees a share. I remember this, our colleague Nigel had done this in Midcap Mania as well, said, the big triggers for them. The first one is that they have unsold inventory at BKC. They have an upcoming project at Oshiwara. And we had the management very recently on our channel. They are also getting into affordable housing, and they see revenues of close to 700 to about 1,000 crores coming in from affordable housing itself. So let's see, interesting place, both of them, how they pan out.
Okay, we'll see. Difficult sector though, real estate. But thanks a lot for putting that on the table, Mangalam. Let's shift focus and invite the first corporate on the channel. This is not a results news. It's an order win. BEL, Bharat Electronics, has won a 9,200 crore rupee order for supply and services of LRSAM systems for 7 ships being built by Mazagon Dock Shipbuilders and Garden Reach Shipbuilders. And under the new shipbuilding program, this order, much awaited order, has gone to BEL. MV Gautama, the Chairman Managing Director of BEL, joins us on the phone line. Good morning, Mr. Gautama. Thank you very much and congratulations on getting this large order that was much awaited. Can you give us some more details, timeline, what margins you will get, and will it be within your guidance range of 17 to 19%?
The 19% profitability of BEL comes with a mix of products and services. The margins we'll be getting in that particular equipment. So we are exempted being a defense company for the segment-wise listing, and we would not like to give you such details. However, I assure you that we will certainly be maintaining our margin position. And this is a very great order for Bharat Electronics. This is the first time we are getting a 9,000 plus crore single order on Bharat Electronics.
Okay, 9,000 crore plus. Mr. Gautama, what about the timeline? Should we expect the revenues to reflect in this year itself, that's FY19, or will it be back-ended?
It will not start in FY19 or FY20, but thereafter the revenues are going to start, and we will be delivering as per the ship's progress, the equipment as well as the installation material and etc.
Okay, so not in FY19. What about your revenue guidance? Do you maintain the FY19 guidance of 12 to 15%? Would you want to up it? And also, if you can give us a sense for FY20 revenues.
Yes. Because LRSAM is not going to give us any revenue growth this year. And if possible, we'll try to bring visibility from FY20 onwards. By the time the ship progress also will be there, and probably we can start delivering the installation kits and etc.
So with this order, the order inflow for the year has already reached over 12,500 crores versus the initial guidance of 15,000 crores. Is it safe to assume that you could be revising your guidance as well?
We will up the annual order acquisition now that another 5,000 plus crores of Akash also I expect this year. And hence, I certainly say the guidance for we will be touching 17 plus thousand crores.
Okay, that was actually going to be my question, Akash. When is that order expected?
I'm expecting Akash order also in Q3. So from our side, we have completed the complete negotiation.
So we understand you will get a 15% advance against this order, and that may come in over the next couple of months itself. What will that be used for?
We will be investing it, enhancing our capacity, and also establishing newer test stages that are required for producing this equipment. So this advance comes in handy for the CapEx program what we have launched for LRSAM within the company.
Okay, all the best, and we hope you get many more such orders. That's a huge order win for BEL, 9,200 crores. Of course, it will be spread out over a few years. We'll take a break on that note.